Good morning. You are watching this video because you're interested in a reverse mortgage. You are currently sitting with one of my Your Home Real Estate agents or Golden Feather Investment agents, and you have questions. Let's get started. The reverse mortgage, it's not for everyone. Uh, it's only for the individual who says, you know what, I'm tired of making payments. I have no help. Social Security is not enough. My retirement funds are not enough. And I just want to be able to get out of my current situation, whether it's temporary or permanently, and avoid making payments. A lot of people have a misconception on reverse mortgages and how they work. A lot of people feel that a reverse mortgage is bad because the equity gets depleted, because the lender takes away their home, you are never the owner. I've heard it all, okay? But I'm going to tell you before I get started a disclaimer. My name is Ruben Allende, and anything that I bring up or I mention is based on my experience with my past clientels and my experience with closing reverse mortgages with my lenders. What's important is that the client knows exactly what they're getting into when it comes to a reverse mortgage. To be able to qualify for a reverse mortgage, you must be 62 years old. We did roll out a new program that you must be 55 years old to qualify for a reverse mortgage, which is great. But it used to be 62 plus. We are now at 55. So if you're over the age of 55, you have enough equity in the house to be able to do a reverse. You own or occupy the property, and you're currently having difficulties paying your mortgage payment. You want to enjoy your retirement money, you want to take advantage of the reverse mortgage program, then this is for you. There's always naysayers when it comes to reverse mortgage, usually third party influence, where they tell you that the reverse mortgage is not good, that they've heard bad stories about the reverse mortgage. But the truth is that that's usually a person who's not too well informed of a reverse mortgage. The children are also the other ones that don't like to have their parents do a reverse mortgage, because they feel that once the person enters into a reverse mortgage, it depletes all the equity. By the time that person passes, the children are left with nothing. So there's ways that you can enjoy a reverse mortgage without hearing it from family members. One of the things that you can do in a reverse mortgage that a lot of people don't know of is you can make payments on a reverse. So if one month you decide you make a payment and the next month you don't, it's up to you. You can make all payments every time, or you can avoid making payments if you want to. I mean, for me, it's if you're in a reverse, it's because you don't want to make payments. But if you don't want the equity to pay your mortgage, then you can pay the mortgage. The way the reverse mortgage works is, instead of you making payments, let's just say at $300,000 you're making a $1,500 payment. The $1,500 comes from the equity. It doesn't come from your pocket. It doesn't come from your bank account. It comes from the equity, and every month it comes from your equity. Will it be depleted? Well, I'll tell you this much. When you make an agreement with the reverse mortgage, whether you outlive the life expectancy, let's say you make it to 120, you're 70 years old, you make it to 120, you won't make any payments. But obviously, because there is probably more than likely no equity left, if you lived another 50 years, there's a good chance there's no equity left in the property, but you enjoyed your life. That's what matters. But if you had 50 years and you made payments, and let's say sometimes you made payments and sometimes you didn't make payments, then there's a good chance that you'll have equity in the property. But remember that the market also will indicate what your property's value is. So if equity gets depleted, not due because of a reverse, but rather because the market went down, or if it increases because the market went up, then the benefit's for you. The reverse mortgage is not long term. It can be if you wanted to, but it can also be to get you out of your current situation. So if you're currently in some sort of temporary hardship, you can get into a reverse mortgage, not make any payments. 2 years, 3 years later, you can turn around and refinance it, or you can turn around and sell it. It's up to you how you want to deal with it. You can also purchase with a reverse mortgage. So not always do you have to refinance. You can also purchase into a reverse mortgage. So if you're currently in a regular loan, your house is too big, you want to downsize, but you want to make no payments, you can sell your home unless you have enough to cover the property's value, all cash, or the property's price, all cash, that you can enter with a reverse mortgage and not make a payment again. In a reverse mortgage, you must attend a 1-hour HUD course. People who want to go on title, individuals, family members who want to go on title with you, must attend the course. It used to be that you couldn't go on title without the reverse calling the mortgage due, which means you would have to sell or refinance the house. you can now have your family members attend the course so that they can go entitle. In case something ever happens to you, then your next of kin will be the ones to decide on what to do with the property. If for whatever reason there is no one on title and the person on the loan happens to be deceased, then the case has been with us that it would end up going to probate, and then the court would decide as to who has the right to sell the property or disperse of the property. If you have a living trust, then obviously they go off whatever the living trust says, and then you can take it from whoever is in charge of the living trust, and they can make decisions on the property. 4 conditions to be able to keep the reverse mortgage. One of them is you must maintain the property. It means it can't be falling apart, can't have the roof caving in. The lender does not want to see that because it's a risk, not only to you guys, but also to the lender for insurance purposes. 2, you must own or occupy the property. Owner occupied means 6 months, 1 day. So if you live somewhere else and you're gone for 5 months and 29, 30 days, you have to live in the property 6 months, 1 day for owner occupancy. You must maintain insurance and taxes paid on time. If you don't, then that's where the lender calls the note due. And you cannot pull out seconds or add anyone on title without the lender's consent or HUD counseling, because at that point, that's part of the reason why they call their note due. Again, the reverse mortgage does tell you, hey, look, you can do this, you can do that, you can do whatever you want, but please pay your insurance, please pay your taxes, because if you don't, then we're going to ask you to sell the property or refinance the property, okay? But there's so many benefits in the reverse mortgage. A lot of people think that it's something bad, but it really isn't. It's really up to the person getting the loan to decide whether it's for them or whether it's not for them, okay? But the reverse mortgage for me has helped a lot of people get out of their temporary hardship or permanent hardship. I've saved houses from going into foreclosure with the reverse mortgage. So if that's you, I'd be happy to help you out. And if you have any questions, then reach out to your lender, your real estate agent. I'm sure they're either with Your Home Real Estate, Golden Feather Investments. My name is Ruben Allende, NMLS 1392737. Have a great day.